Hello, and welcome to another Webinar Wednesday by Smartkarma. I'm Michael Tegos. Today, I have the pleasure of welcoming insight provider Evelyn Zhang, who will examine the impact of recent policy decisions on the future of China's tech companies. Evelyn has over a decade of experience at firms like Morgan Stanley, Bank of America Merrill Lynch, Agricultural Bank of China, and Lenovo. Her expertise includes research and investment into tech companies of all stages, with a particular focus on emerging technologies. Evelyn, let me welcome you to the webinar. Thank you very much for being with us today. The floor is yours.
Thank you, Michael, for this opportunity. No doubt many of you have heard the new data security law recently introduced in China that has wide applications across tech sector. So in my talk today, I'm going to discuss some of the implications of these new regulations. The first thing you need to know is this is not the first data security law introduced by Chinese government. In fact, the first data security law that was introduced is in June 2017. So what has changed? The new law primarily tackled data collection, data storage, and usage. I've summarized the 7 direct consequences that you would see most impacted of this regulation. So number 1, it is more difficult for companies to obtain and accumulate user data. Number 2, digital advertising alliance will be impacted. Precision advertising ROI will decline. Number 3, mobility service provider like Didi, Ctrip will no longer be able to offer differentiated pricing through user profile, also restricted for containing on national geographic information. Number 4, public cloud market will transfer from current internet cloud provider to state-owned cloud, benefit infrastructure and service provider. Number 5, facial recognition AI such as in-car camera for autonomous driving assistant will be impacted. Number 6, short video content platform will have restriction on the use of recommendation algorithm, which may cause a decline in user time and e-commerce product recommendation accuracy. Number 7, internet company with more than 1 million users that have planned to list it in US will have to reconsider. So let's examine the regulation one by one. First, let's talk about personal information collection. Personal information collection now based on informed consent and least accuracy. Least necessary. Informed consent means user consent must be obtained before data collection and usage. Users are aware of the processing person, the purpose, the type of information collected, and the retention period. Least necessary restrict amount of data that's be able to collect it to a minimum. This data collection will greatly limit the ability and the scale of the company to collect data. More importantly, companies should not refuse to provide product or services if individuals do not agree to share their personal information or withdraw their consent. If the user has to provide essential data, the user should not deny the use of basic functional services if he or she does not agree to provide non-essential personal information. The individual has the right to withdraw his or her consent. Retention period of personal information should be the shortest time necessary, so it is more difficult for the company to accumulate data. An individual has the right to transfer data, so large companies must open up data transfer channel to smaller companies and protect the individuals on different platforms. That means the companies are more difficult to obtain and accumulate data. Accurate user profiles are the basis for personalized marketing and price discrimination. Data collection limitation reduce the accuracy of user profile companies that can create for their users. And least accurate user profile affect the accuracy and conversion rate of digital advertising, especially for the alliance market, the advertising ROI declines. And the pricing differentiation based on user profile will decrease. The protection law set up a special regulation for pricing algorithm. Individuals have the right to refuse to have her personal information to be released for such an algorithm. Data storage. On August 27th, Tianjin municipal government has ordered government firms to migrate their data from private operators like Alibaba and Tencent to a state-owned cloud system by September 30th, 2022. With immediate effect, it is no longer allowed to sign or renew cloud resource lease contract with third-party public cloud platform. At present, the public cloud market is dominated by non-state-owned cloud, and customers in the government, financials, and other industry occupy an important market position here. Alibaba Cloud is the market leader in China's IaaS and cloud infrastructure service market, with over 43% share of the market, despite growing competition like Huawei, Tencent, and Baidu. Alibaba has managed to maintain its dominant position in the domestic market with a marginal deterioration in the market share over the last 3 years. So if we look at 2020 China public cloud industry structure, 13% are government clients that may be gone by this time next year. Also, 7% education clients focus on live streaming courses that will disappear by recent Chinese education policy. And if you can see that Alibaba current government clients involve state taxation administration, People Bank of China, National Healthcare Security Administration, and State Grid, Ministry of Transportation, General Administration of Customs, and Zhejiang's public will locate. So we can see the current cloud provider like Tencent and Alibaba will change from cloud provider to technology provider to building a state-backed cloud through bidding systems. Currently, there are 7 provinces start open bidding system for government cloud. Alibaba won Hangzhou, Huawei, and won Hangzhou. Huawei, Tencent, Unicom, Telecom that together will help to build Shenzhen. Inspur participant in Tianjin and Chongqing, and Kingsoft participant in Sichuan. So this public cloud transition will continue, but the current leading cloud player won't have much advantage in bidding winning. And the whole transition process, the state-owned cloud policy promotion will benefit cloud infrastructure, data security, and IT system autonomous control, and service provider in the industry chain. Facial recognition. Using facial recognition technology to verify, identify, or analyze face in hotel, shopping mall, banks, all these business and public places would require the person to separately approve. Otherwise, it will consider infringement. So what we see is in-car camera for autonomous driving assistance that provided by Tesla, NIO, Xiaopeng, that will likely be impacted in future. Algorithm. So there is also some restriction about algorithm on the use of the content recommendation on short video platform that will cause the decline in user time. So the algorithm recommendation service provider need to conduct a regular review and must not induce user into excess consumption. Platform need to explain the recommendation mechanism to the users. And the user can choose to turn off recommendation algorithm. So all these that will very likely to impact the current market players like TikTok and Kuaishou. So I'm going to talk about the data export and national security together. And what we can see is Didi and Mangbang that have large amount of user travel data and high precision maps can be used in autonomous driving technologies. And also Mangbang's truck and platform have data related to the country's logistic and transportation that are very highly sensitive to data and relevant to the national geographic information security that raised alerts during the IPO process. Also, from the data export, company with more than 1 million users that must seek approval for a cybersecurity review if they wish to list overseas. But if they choose to list in Hong Kong, they will be exempted because of the national security law. So there are several domestic internet firms such as Himalaya, HelloBike, and so that all have over 1 million users and have halted their IPO in the US for this reason. Himalaya filed to Hong Kong IPO yesterday. So we can see the trend will continue from companies wish to list in US, they change their listing position, a listing location. And I think this whole process, this regulation will continue to be introduced in the future with more details. And all this will put more pressures on the rebound of the tech stock prices and the increased operating cost of the internet company to ensure the business clients that would affect their short-term profit. So this concludes my presentation today. Thank you, Michael.
Thank you very much, Evelyn, for painting this picture for us. One question that comes from the audience is, does the Tianjin municipal government regulation to store user information in government cloud, does it apply to state-owned enterprises or residents outside of Tianjin, or is it only within Tianjin?
First, it's only applied for the SOE, and it's only within Tianjin. And there's no personal data that's being forced to transfer at this stage. So we see the companies that sign up to store data are all of companies like Transportation Administration, which is considered like the most important, and the other government entity at this moment. So basically, it's still really just focused on the government, like state-owned government at this stage. It's not even big SOE clients, and we will see this trend will likely to continue in the future. But it's kind of like a very small migration, and it takes time till this time next year, and we will see more companies will do that. So what we see the client, the client list, and see the client, yeah.
I see, thank you. There's a question about the Chinese government's encouragement for self-reliance on semiconductors. So I'm not sure if you can comment on that, but though the Chinese government encourages self-reliance on semiconductor production, the semiconductor stocks have been dropping. Are there any reasons for that?
First, it has been increased for quite a while, and because increase is because of the short supply of the raw material and semiconductor. So that's those lot of providers have constantly increasing the price. And a lot of investors think it's more like it's more periodic instead of a permanent increase. So because of the short supply of the raw material, the COVID infection in Malaysia, the Malaysia factory, and all these constantly pricing increase because of the COVID effect. So it has been increased for three quarters, and people don't see that as a permanent increase. They mostly it's like a cycling effect, what we heard from the investors, and they're very skeptical about whether this is a growth trend or the cyclic trend. And also because like what we heard is, and they think like whether this price will continue to increase is one of their concern. And the other concern is like it normally takes time for the Chinese government, for the semiconductor to be large produced and to be used within the product. So people are skeptical whether this will be successful. Even Chinese government put a lot of effort. But it takes time for the market to use the semiconductor to recognize this domestic produced semiconductor product to be mature. So this is what we heard from the investors about it. But what we heard from the companies is more like, because the product is actually in the next, there is more and more consumer products that's required more and more semiconductor chips within the product. That's so basically, for example, let's say if you like before, you may now need 6 chips within the same product, and to increase to all 6 sensors, like for example. So what we see is like some of the products that will have this growth because of the downstream consumption increase, but right now it's being covered by the large raw material price increase. So that's why people have some concern within it.
Understood.
Sorry, back to the previous question. And now I found that like there's a client list I get for the Zhejiang and Tianjin that's already signed up with the state-owned cloud, and which is mostly like in Zhejiang is the transportation, the trade and energy and logistics. It's all government-owned entity. And within Tianjin is transportation and the state capital investment. So you can see it's all like just the SOE and yeah, at this moment.
Got it. Another question from the audience is, do you think the data security restrictions will have an impact on those companies that have foreign ownership, but their main operations are in China?
I think that's already been introduced. It's already been covered by 2017 regulation. So basically in 2017, that's if you are operated in China, like for example, Apple, then you're already required first for Apple to comply with this Chinese law. They have already stored their data in, they have built their data center in Guizhou. So all the Chinese users that need to go to the iCloud, all this data is stored in Guizhou and it actually can be accessed by government if government required it. So I think that was already being introduced in 2017. And what we see in this round of more data security is more about the current internet companies because about the data classification and storage and then the personal protection law. And if you ask me to say, it's more like the Chinese government now see data as an asset instead of for this. So it's kind of different from the GDPR attitude towards it. It's not about privacy. It's more about the data and it's more about asset and how to use this asset and how to run this asset. So this round is more like those Chinese internet companies to constrain their usage around the data. That's what we see about the algorithm, the facial recognition, all these things that kind of put a limited in the current Chinese internet companies expansion.
That actually leads well into another question by the audience. The first part is, when will the implementation of those new regulations be completed? And then how will that affect the profitability of big tech companies? Because as you just said, data is very much an asset for a lot of those companies. And as you mentioned during the presentation, it is a lot of those companies' main business model. So what do you think about that aspect?
Well, first you see, like it's not only data security law that introduced right now. It's a ton of regulation they introduced together, like including anti-monopoly law, including so if we put all those into if you calculate all this together, for example, you see the anti-monopoly law that lifted the exclusivity from the Ali, so it may benefit JD and Pinduoduo, but on the other hand, it also required Tencent to connect. So basically, Tencent WeChat helped to attract the traffic, to help attract the traffic for the JD and Pinduoduo. So if you ask Tencent to lift it, it actually also affected their traffic, and it will benefit Ali and TikTok companies. All these kind of together. So what we can only see is like for the past, for example, on exclusivity lifted that benefits JD, we can see their user numbers and then has been increasing from the last quarter immediately in short term. But the next and how much they are going to increase or decrease to be quantified, it's kind of like a bit difficult to say at this stage. And more importantly, I think is also this common prosperity based on prosperity that kind of increasing the tax for the Tencent and Ali, and also ask for companies to pay more social security and help the workers. And all this together, it will affect the short-term profitabilities at this stage, but to quantify it, I think the market idea is that it's better not to disclose too much profit at this stage, like JD did to their annual report, to their quarterly report. If you see that JD quarterly report, interim report, that's I think it's only 1% net profit, and they spend a lot on their national security for their delivery contractor, which consider a very good example for the common prosperity at this stage. Yeah, that's my thinking.
Understood. Thank you very much for that. So you've kind of answered this already, but an attendee has a question about the revenue impact on TikTok for the next 1 to 2 years, considering what you mentioned about the new algorithm requirements. I know you just said that it's a bit difficult to quantify at the moment, but do you have perhaps a general picture for TikTok in particular?
Before this round of regulation, TikTok was considering to list it in Hong Kong, what we heard, but it may hold it for a bit. And also we need to see, I think they are going to launch their independent e-commerce this November. So they used to just help to be the major traffic for the other e-commerce, and now this November they are probably going to launch their own e-commerce, and this algorithm restriction is very likely to help them to get benefit in the short term. But other than that, I just cannot comment. Yeah.
Another question is, do you think that data centers operations will be regulated too? And I guess I assume that the attendee means data center operations other than the ones run by Alibaba, Tencent, and the like.
I think first there is a data classification, and we don't know what that is yet, but we know for now the private information that's considered to be sensitive, including religions, belief, and revenue, and all this, there is a category for the sensitive information. So basically you cannot use this sensitive information at all. And all this information that's being stored, what we see right now by the e-commerce is already being encrypted. And if they need to send to the alliance advertising alliance agency, that's also need permission, and it's not as easily readable as before. So I think more encrypted at this stage for now. And also we need to see the classification. So we know the sensitive information. What we know is what government care about most. Consider national security is more about transportation, and then mobility is data at this stage. But we are waiting for the new things. And for the data center, I think we haven't seen the detailed regulation on it, but we see if other third parties need to use the data, need to access to these data centers information, what they need to do, also including the government agents, if they need to access to these, for example, if they need to ask for Tencent and Ali's, the data stored in Ali and Tencent's cloud, what they need to do, how they need to file those application, on what basis, and what kind of information that's required, all these kinds. Yeah, so we think it's more like the data classification. At least we expect it will be a data classification next stage first, before it's just the data centers.
Another question is, will the requirement to use government cloud infrastructure affect Alibaba and Tencent cloud business to a point where it would lead to lower stock prices?
For Tencent business, if you see that it's not a big proportion yet, it's actually within the others. So they didn't disclose the cloud separately. And Tencent is a much later commerce, so that's there is a limited impact. For Tencent government client, their client is mostly where is in Shenzhen, so where they are already. And I don't think they have much exposure to other province. So I think it will be limited, but it will limit the growth imagination. And for the Ali, that will have a much larger impact because you see that their client is they have a large to be client, and also they have they're not just education. TAL is their client, so the education sector, and then the government sector they have like a lot of connections with the government client. So what we see is I said is 20% public market, but for the allies, probably I would say like at least 10% of the cloud will be like impacted, and also in the future it will kind of limited imagination and then valuation. So yeah, for the cloud, for the ally, it will be much larger impacted.
Got it. Thank you for that. Another question involves basically the sentiment towards all those new Hong Kong IPOs, assuming that a lot of those companies that are rethinking their IPOs in the US will turn towards Hong Kong. So what do you think is the current sentiment for those potential upcoming IPOs? And for institutional investors, what would they need to see, I guess, in order to have a positive sentiment towards those IPOs?
What we see is that Hong Kong IPO is that they have a very healthy pipeline at this stage. They have 200 companies in their pipelines. And considering last quarter, there's only 246 companies that got listed. So they have a very healthy pipeline at this stage. Also, like even for the dual listed companies, because of the US regulations, to ask the Chinese government to disclose, to be able to check their accounting data. But for that point, that Chinese government do not allow any accounting data to be outside of China without approval. So in that case, many companies will probably be delisted by the US. So it also put a lot of increase for the dual listed at this stage. So I would see like a lot of tech companies will reconsider to list it in Hong Kong. At this stage, it's pretty obvious right now. And also even for the Ali, they only issued 3% new shares in Hong Kong by the time of IPO, but now the trading is about 20%. And I think most of the company will increase to 30%. So it's kind of like a very obvious trend for the Hong Kong IPO.
Great, thank you very much for that. Maybe we can take a final question from the audience, and this concerns the curbs on edutech and after-school tuition. Do you think that the government should be concerned about increased unemployment numbers following those curbs, or are the two kind of not related?
So, for example, all these education sectors that's being heavily attacked by the current regulations, what we see is like a huge layoff, no doubt. So all those major companies, they have 20 to 30% on the first round of the layoff at this stage. And what government is trying to do is they are increasing their public school offering, teachers offerings. So they hope to put those private education, private after-school education into these public school systems. So this will open up some position, and because they actually want this after class education to be non-profitable and nationalized. And so it will increase some position. It will increase some bidding process that if you want to work for the government, help the government to improve it. And but most of what we see in this market is right now there are more people are just looking for other parts at this moment. We haven't seen a lot increase within the government education sectors at this stage. But we heard is the teachers within the system will grow.
Got it. Thank you very much for that. Just as I guess to sort of wrap it up and kind of bring it all together, how far reaching do you think these changes will be in terms of time wise, basically? Like, do you think these changes are here for the long term, or do you think we will see other changes in perhaps like 1 to 2 years time when the impact has been felt?
How soon those impact will last? I mean,
basically, like, do you think that these regulations are here for the long run, for the long term?
In the foreseeable future, yes. And the things we care about is, first, we don't bet on it. So I think it's better not to bet on this, at least on the government. And second is, if it's infected for the 2 or 3 years, it will affect the primary market valuation and the business model. So the thing is, if like government puts, for example, if a government puts very strong on the anti-monopoly regulations on the super apps, so the previous winner take it all business model will no longer be sustainable. So the growth model like DD, that they just spend the money in the previous to gain as much market share as possible, and then when they become number ones, they can charge a much higher price. That kind of business model will probably no longer able to sustain. So that will put the primary market in a much lower paces than before, and also the IPO process. So all these kind of things that will have a chain effect, even it's just 2 or 3 years what we see. And also like there are a lot of regulation. We see that the government that there is a time for government to put on it. So for example, even when you see the education policy that investors feel it's a bomb, it's actually government has already consulted, has taken advice on this for, I think, for more than a year. So it's for the education industry. What they see is like, we can see even in spring, New Oriental has already stopped hiring teachers for the summer. So the entities within this industry, they actually know. And to wait for the regulation to actually effect it and implement it, it's time. So what we see is like we are guessing, but it's also like 2 or 3 years before it's effective, and 2 or 3 years during it's effective, until government finds, okay, this is may not working. We need some new things to remedy our previous one. So it will have a chain effect in the short terms, I think. And then also the investor will change their way, and the internet companies will have to change their growth model in the short term.
Understood. Well, thank you very much, Evelyn, for your insights today. And thank you everyone for attending and for sharing your questions. If you wish to engage Evelyn for bespoke research services, you can contact your Smartkarma account manager. And of course, I encourage you to look up Evelyn's insights on Smartkarma and see more of her analysis. If you have any other questions or comments, please email us at research@smartkarma.com. Evelyn, thank you very much for being with us.
Thank you, Michael, for having me today. Thank you, everyone.